time. No, not at all. I'm really confident after all these years being around markets, real estate. To give you a little background about myself, I'm 69 years old, same age as Lou Alcindor, and I was born on the building site. That's how much I know about real estate. I'm the son of a home builder who was a builder-developer for 50 years. I was raised in this business. I know a lot about real estate. I live at dinner tables at home. Believe me, more than once, we moved into one of my dad's spec homes that didn't sell during the down cycles. Nothing like first-hand experience about real estate. Real estate is a boom and bust cycle, as I'm going to explain to you, and especially in California. Now, that's good if you're on top of things. That's really bad if you're not on top of things. Because if you buy at the wrong time, you're in a world of hurt. And even if you avoid suffering the loss, your return on investment, if buying at a bad time during a 5 to 10 year period of time, is going to be 0 or a negative return. Because if you pay high and it falls, even before you get back to break even, it can be 5 years, it can be 10 years. And that's not my idea of being a successful investor. I've been around the markets my whole life. I started investing in the stock market when I was in high school. I told my dad, I've always been a speculator at heart. Always been and I was a developer myself for 10 years, a full decade. General contractor. You know how many houses I built for other people as a general contractor? 0. I mean, if you're good at what you do it yourself, right? And I don't like to take orders from anybody. You know, my dad was always self-employed. I'm always self-employed. Usually the apple doesn't fall, too far from the tree. So I've always had to make it on my own, and I really like it that way. But I've been around real estate my entire life. So let's get started tonight. I have 106 slides, and it's going to take me about an hour and 20 minutes to get through this, and I'll take questions afterwards, okay? It pays to be paranoid. Success breeds complacency. Complacency breeds failure. Only the paranoid survive. Now, you might think who somebody that said that is a real negative individual, right? I mean, my God, it pays to be paranoid. Andy Grove said that, the co-founder of Intel. For those of you who don't know the stock market, Intel is a Dow 30 stock. Andy Grove is a high IQ individual with a net worth probably $5 to $10 billion. So he's not a loser. He's a winner. But the reason he said this was that if you're not on your game all the time, like the Intel, the chips they make, somebody could come up with a chip that's faster and that's cheaper, and you know what business, you know where Intel is? They're out of business. And so that I was super motivated by that, and always have been motivated by that. And I've been around the markets my entire life, and what I've learned is that defense wins. We all know who Warren Buffett is. Warren Buffett has 2 rules for investment success. Number 1, don't lose money. That's number 1. Don't lose money. You know what rule number 2 is? Follow rule. Don't ever forget about rule number 1. And I don't know if any of you guys are old enough. Anybody here like 65 years or older? Remember Louis Rukeyser with Wall Street Week? Did you ever watch that when you were a kid? Well, I wouldn't have missed that for anything. There was a guy in there, guy's name's evading, skips my right now, but he had new guests come on all the time. That was a super successful program, by the way, for 20 years, and all about the stock market. And one guy on there was the best investor. He had the highest returns of anybody. And Louis asked him, he goes, "How are you feeling right now?" And he goes, "I'm nervous. I'm real nervous." And he goes, "My God, Joe," or whatever your name is, "your returns this year are better than anybody. You've made 15, 20% return this year. What are you nervous about?" He goes, "I'm nervous that the market's going to change and I don't change with it." And that always registered with me. Most people don't play defense in the markets, you guys. And they think it's all offense. They think it's everything is just up, and away. And in the long term, things do. The stock market, the general trend is up. The real estate market, the general trend is up. The economy, the general trend is up. But it's not a straight line, is it? It's like this. And you know what kills people? It's the dips. They're unprepared for the dips. Watson. Ted Watson, the founder of IBM. What was his first name? Thomas Watson, founded IBM. And somebody asked him once, I read this, and he said, when are you most nervous? And he goes, during the good times. And exactly what they didn't expect him to say. You know why I said that? Because people put down their guard. They overspend, they quit paying attention to business, and when the bad times hit, they're unprepared. This is the guy that founded friggin' IBM was saying that. So smart people know about defense. And you have to be a good investor. Well, I don't care whether it's real estate stocks, you know, bonds, gold, whatever. Markets are markets. Markets are markets. And you have to always be on defense thinking, I mean, you got to know when to enter markets, and you got to know when to get out of markets. And if you don't think that's true, that in the history of the United States, for every 100 people that reach the age of 65, you know how many of that 100 are comfortable financially? 4. That means 96%, as hard as we try, are unsuccessful. That's the challenge, you guys. It's a challenge for all of us, me too. So with changing market cycles, with inflation and taxation, 96% of all people don't make it. So it's almost, it's almost as bad as making it into the Major League Baseball team, on the Major League Baseball team. Even if you're good, and get to the and you play ball in the minor leagues. You know what? Anybody that plays in the minor leagues, you know, A ball, double A ball, triple A ball, are they good baseball players? Damn, I play with them. I wanted to join an over 50 league once and thinking, I'm in great shape, I'm going to kick ass. You know the people that are in the over 50 league? Ex-Major League Baseball players. I mean, they're not in the shape I'm in, but they can still throw the ball fast, and the ball curves when you're trying to hit it. I said, I was already out there, so I guess I didn't have the skills. But remember, 1% of all people who play minor league ball make it to the major leagues. That's how competitive it is. So we're in a competitive world. And, you know, you're just going to have to rise to the challenge if you want to be extraordinary. One of my favorite sayings, life is too short to be average. I can't stand average. I wear a t-shirt that says that in the gym all the time. And about 1 out of 20 people come up to me and go, I like that t-shirt. The other 19, because it motivates me, that's why I wear it. The other 19 are intimidated by it. Oh, I mean, what if I'm not, I could fail trying to be above average. You're damn right you could fail. We all fail. I've failed. We all learn from our mistakes. So, it pays to be paranoid. Survival of the fittest. Darwin, it's not the strongest of the species that survive, nor the most intelligent. It's those who best adapt to change. I bow down to that every single day because I'm an active investor. I'm not an active investor in real estate anymore. I'm too old for that. I've got a great business, publishing business. I can't do spec buildings anymore because when you're a spec builder, you got to pay attention to detail. You know what time the job starts in the morning? 7 o'clock. I get up at 5 o'clock. That's why, because I come from that kind of family. My girlfriend and I, we get at 5 o'clock, look at the news, talk about economics, talk about the day. But I mean, if I have to be on a building, if I'm building and building successfully and profitably, I couldn't do what I'm doing now. And it cuts into my lifestyle. I go to the gym every morning at 9 to 10, work 2-3 more hours, come back, run on the beach in Del Mar for an hour and a half, and come back and work the rest of the day. I do that grind like that 7 days a week. It's a rough life. But I love what I do. And you know what? I tell all you guys, you know what the best investment in the world is? Especially how long we're all living? It's a skill or a good business. Because whether you like it or not, you're going to be living to 100 years old. Me too. And I've divided my net worth by 31 years, and I'd be okay, but I'd still like to have a little more. I mean, most people don't have enough money. You're going to be working. I mean, so you might as well do something that you love. And people ask me, Bob, why do you keep working? So a lot of my friends are playing golf. And golf, that. And I said, hey, I'm too young for that. I'm too young for golf. That's what, how important would it be? I wouldn't be challenged. I would be doing what I'm doing now that even if I wasn't paid for it. I told my girlfriend, I said, when I get to be 70, I think I'm going to start slowing down. We're going to start chilling a little and spending a little money going places. And you know what she said? you're never slowing down because you love what you do. And if you do something what you do, one, you're going to be good at it. And two, why would you ever stop? Why would you ever stop? Right? If you really enjoy what you do. So you got to adjust to change. Fortune 500 companies. If you don't think that's true, Fortune 500 companies. Compare 1955 to 2015. Only 12 of those companies are still on that list. Now, do you think the 88 that fell off the list were idiot losers? Or do you think there's some other reason? Things changed. The markets changed. They didn't adjust. Either they went out of business, or they contracted where they're no longer on the list. So that's that's what we're up against. All of us, every day, every day. The U.S. housing market, where it's going and why. Trend is still up. No question about it. Trend is still up. California, nationally, the trend is still up. I'm going to talk about national real estate prices first, then I'm going to go to California. Core logic. This is what the Fed uses. This is what the Federal Reserve Board uses to monitor the real estate market. September of this year, they're up 6.3% year over year. This is a momentum chart. Momentum chart right here. And what this, see how it's been kind of flat for the last year and a half? And all of a sudden it jumped back up? Prices are accelerating right now. People ask me why. I go, I don't know why. What you have to understand about investing is this. Why does it matter? You know what matters? What? What is happening? To be a good investor, you have to be totally objective. I am 100% driven by data. And I've came to that conclusion and learned to do that because I'm a pretty smart guy, I think, but I've tested my own gut feelings against the data, and you know what comes out on top? The data, 10 to 1. 10 to 1. So I don't even rely on it anymore. I don't even take my gut. Yeah, I have gut feelings. I have a big sense of where the big picture is, and I'm going to be sharing that with you where the U.S. economy is going and where it's going to take the markets and what you should be doing with your money. But that's purely mathematics. That's not, there's no mathematics to this right now. But I can tell you, that certain mathematical computations, it's real clear what's going to happen. That's the scary part. And by the way, there's a big change not only is this big change coming, but big change just occurred in the United States, right? Huge change. And if you don't respect that, and think things aren't going to change, there's a new sheriff in town, boys and girls. New sheriff in town. And I know Donald Trump. I'm not personally, but I've read his books. He's a real estate man. I know what he is. He's his own man. And nobody's going to push him around, I promise you. And you know how many favors he owes? He is a conservative individual that, that just believes in, here's what the Constitution said, here's what the law says, and that kind of thing. And I was kind of raised in that family, that kind of thing. I was just, a God-fearing, you play by the rules, you're honest, and let's see how things see how things roll out. Because right now, today in the United States, the difference between the haves and the have-nots is the biggest it's ever been in history. That's why Trump was elected. This was all about economics. I don't care whether you love the guy or whether you hate his guts. He was elected because the average American is not doing well. Hillary Clinton could have been stealing money right and left, visible to everybody. I mean, completely visible. And if the U.S. economy was strong and everybody was doing well, would that have mattered? No, wouldn't have mattered at all. It's always about money. The old expression, follow the money. It's always true. And I'll tell you what's happening in the Middle East. It's about money. 80% of the time, it's about money. The Middle East isn't about the Sunnis and the Shiites. That's 20% of it. The rest of it's about money. The little three-letter word called oil and gas. It's all about money. Where U.S. home prices are today, we're back at CoreLogic. They're 5.2% below the March 2006 peak. 5.2%. In other words, if you were unlucky enough to buy here in the peak in 2006, 10 years later, you're still minus, in the minus column. That's not good. That's not good. This is nationally. California's worse. By the way, I'm a market timer. I invest for capital gains, not cash flow. I'm in the process, since this book was written in 2002, 14 years ago, I'm writing a new book. I've tripled the level of knowledge since I've written this book. I always answer my own phone if I'm there to answer, because you wouldn't believe the people that have called me up on the phone that have read this to see what I'm doing, because nobody else is doing market timing like I am on a national basis with data only. And really clearly defined, here's where you buy, here's where you sell. Months, a month, a date, a month and a year, sell. I mean, because it's all data. But it's one of the things that, so I've made so much knowledge, because, I mean, talking to important people call me up and, they say, I don't know if you know me. He goes, know you? I read your book 30 years ago. They go, really? Yeah. And he goes, Mr. Campbell, I like your work. It's good. It's good. And one guy called me out, a big hedge fund guy, and I said, look, I can't take any credit for how accurate my timing model is that I created. I said, look, I'm not that smart. I'm not that smart. My model's really smart. And you know what he said to me? He goes, I'm sure that hedge fund guys talk like construction guys. The F word isn't a bad word. That's just part of the. I'm sure that effing thing just fell on your desk one day, Mr. Campbell. I said,